Yo, what is going on, everybody? Welcome into today's video. Today I'm going to be going over the continuation model that has made me over $70,000 this month trading with prop firms and a live account. I post my P&L every single day on my Instagram. That's @GSTrades if you guys want to go check that out. Also, quick little announcement. I've been going live on TikTok. I started streaming on TikTok yesterday. It's a GS Trades with a Z at the end because GS Trades was taken. And I called out two banger signals. One of them, I woke up to over $3,800 in profit this morning. I alerted it last night on stream. And then a gold trade yesterday that made around 6 to 700 on stream. So pretty sick. I do live streams for Asia over there every once in a while, a couple times a week. So make sure you guys tap in with that. And without further ado, let's go ahead and get into the continuation model that has made me over 70K this month. So before we actually show some chart examples, we need to talk about what is a continuation model and how we can set one up. So a continuation model is going to look something like this. First of all, we're going to have a pool of liquidity. That is the most important thing. You have to have a draw on liquidity. Now, a draw on liquidity is going to be key levels where the market wants to return to. So that can be levels like equal highs, very prominent pools of liquidity like these right here, like these very big swing points, session highs and lows. Like these, Asia, London, New York, previous day high, previous day low. We also have my ticking toolkit indicator that goes over all my key levels. Those are also really good draws on liquidity. So those were all examples of draws on liquidity. You need to have at least one. And what you're going to do is you're going to wait for the market to trade close to a draw on liquidity and then start to make a pullback. Okay, this is the most important part. You can trade different kinds of continuation models. We're going to be going over kind of like two. They're the same, but they're on different time frame scales. So right here, we would find our draw on liquidity. Let's just go ahead and say this was previous day high. Okay, so this was previous day high. That was a draw on liquidity. Here's where the market opens right here. The market gets close, but then it manipulates and goes down. Okay, this is very important. So what the market's doing is some people are going to be selling their positions early, and the market is taking this opportunity to collect liquidity and bring us to this level and get some extra buy orders in this case in the market. So what we're going to have is we're going to have market open, we get close, we pull back. Now what you're going to be doing is you are going to be looking to take advantage of the pullback and take a continuation higher. So this is what your trade would look like right here. Now let's break this down further and actually go into what causes the manipulation, what you need to look for, and how you're going to enter with this strategy. Okay, so once again, we are using a previous day high example. This goes for all draws on liquidity, but essentially, when you see the market get very close to a pool of liquidity without actually sweeping it, that's a very good sign that it will get swept. The only way this does not get swept is if there's an SMT, meaning if we're looking at NASDAQ right now, if ES sweeps the same high and NQ doesn't, that is a different story. Okay, but if they both have not hit this high, it is very likely that this high will get hit. Okay, so what you're going to be focusing on is this price leg up. So essentially we have the bottom of this range, we have the top of this range, and we have this uptrend, okay? Now what we are going to do is we're going to look for three price signatures inside of the uptrend. Okay, so now in this price range, you are going to be looking for 30-second, 1 minute, 2 minute, 3 minute, 5 minute, and 15 minute fair value gaps and internal range liquidity inside of this price leg right here. Okay, so essentially you're going to be looking for PD arrays inside of this price leg that got close to sweeping liquidity but did not actually sweep it. Now a lot of times what I like to do is I like to take my fib tool and I like to draw out the OTE. A lot of the times the market will want to go down here to around 705 in between 6.2 and 7.9 and form a reversal, and I'll show you guys entry triggers and things on how to actually get in the trade here in a minute, but I'm first going to show you my fib setting. So you guys take a screenshot or pause the video and I want you to go and copy all of these down and then go and save this as a template down here so you can apply this to your chart. In bullish examples, you're going to drag the fib from the low to the high, and then for bearish, you're going to go from the high to the low. All right, so now here's what we're actually going to be looking for inside of this price leg. So we look here, we have 30-second, 1 minute. I didn't add 2 minute, but 2 minute counts. All sorts of fair value gaps, but I do 30-second through 5 minutes and 15 minutes inside this price leg. And we're going to be looking for a fair value gap. We're essentially wanting price to manipulate into this gap and then form an entry out of here. Okay, so say this is a 3-minute fair value gap. We're going to wait for the market to trade into the 3-minute fair value gap, and then we're going to scale down the time frame. Okay, because a lot of the times once we hit this manipulation, the market is going to displace and take us to our next pool of liquidity, which in this case is previous day high. Okay, so we're going to scale down to something like the 30-second. So we first identified we have a 3-minute fair value gap. That is our manipulation. But this is very important. I say this, you want to make sure this is the only gap in the leg, okay? If you have a 1 minute down here, you definitely want to mark out a 1 minute fair value gap because the market might want to go a little bit lower and trade into that, and you can get a more precise entry. But in this case, let's just use a 3-minute fair value gap to start. Okay, so we have a 3-minute retracement. Then we're going to scale to around the 30-second time frame, the 1 minute, the 2 minute, ideally under the 3 minute. Sometimes you might even need to take a 10 or 15 second. This is rare. I took a 10-second inverse today because I was very confident in the draw, but right here, let's see. Let's say that the market traded into the 3-minute and we left behind a fair value gap right here. Okay, say we left behind a 30-second fair value gap. Okay, so we're going to mark this out 30 seconds. Let's change it, make it a different color. You are now going to wait for the market to close above this 30-second. All right, once the market closes above the 30-second, you will be slapping on your long position with a stop loss at the low. Okay, and usually this gives a crazy good risk to reward because with you doing this, this newly created low is just a manipulation leg. The market is not likely to go back and run the manipulation leg again. Okay, so as you can see, the market gets close to previous day high, we manipulate to a 3-minute, and we inverse on the 30-second. And from what I've seen, around 90% of the time, we're just going to pump and go for previous day high. This is especially good if the market rebalances the range. Okay, meaning taps below 0 0.5. A lot of the times you'll see the market go slightly dip below or above 0 0.5 and then reverse. Okay, so we rebalance this range into a fair value gap with an inverse out. This is like a perfect setup here. Another thing you can do if there is not an inverse here or a fair value gap, which a lot of times there will be on different time frames, you just have to check them all. You can do a CISD, so a change in the state of delivery, and that could also be your entry if there's a lot of displacement. But personally, I like doing inverses. So yeah, so now let's go ahead and get into an actual chart example. Alrighty, so I'm going to go ahead and give two examples right here. For this first one, we are going to be looking at this draw on liquidity right here, this swing point. So we're going to go ahead and mark this out. And here's how we're going to confirm if this is a good area to target. Okay. First thing I'm going to do, we're going to fast forward. We're going to see if we get close to this level. Okay. As you can see right here, we got very close to this level, but we haven't swept it yet. Okay, we're on the 1 minute. What am I looking for? I'm looking for fair value gap. So we have a 1-minute fair value gap right here. Okay. So we're marking that out. 1-minute fair value gap. This could be your manipulation. Let's go to the 30-second, see if there's anything there. Okay, 30-second lines up the same, but what's it called? It's just taller. Okay. So what I'm going to wait for, I'm going to wait for the market, because we just edged this draw on liquidity. I'm going to wait for us to go back up. Bang. Now I'm looking to slap in a short position, and sometimes you can do this. I do this sometimes. I'll do it the second we trade into a fair value gap, if I'm very confident, and do a stop above the gap like this. Or we can scale lower and see if we can get some sort of lower time frame confirmation, like an inverse maybe here with this tiny 15-second. Okay, so we did get this close right here on the 15-second. So if you didn't get an entry at the 1 minute right here, you can take this little 15-second IFEG. A lot of times you won't have to scale down this far, but it is possible. Okay, so now you're going to target your draw on liquidity, and let's see. Bang. Trade plays out and sweeps out the draw on liquidity. And right here, that was only 12 points, but this was because today was a really choppy day. We had zero news. We didn't have any news yesterday, but that is the exact model right there. And that was with a scuffed entry. If you got in at the 1 minute, like I was about to today, you would have got almost 20 points. So that is the first example from just today, and we're going to go back to different days as well to show more examples. But this is just goes to show that it even works on choppy days like today. You guys, now for this next example here, we do have a CPI data candle just to show you that this works in all different kinds of market conditions. So first thing we're going to do, we're going to mark out data high and data low. First of all, data high was already swept. Now we have data low. Okay, we're going to mark out the 1 minute fair value gap on the data candle. We're going to drag it out. Very important. I say this in like damn near every video. Go to the rectangle tool and turn on the midline. You need that. That's called the consequent encroachment, or the 50% level of a fair value gap. Now, we're going to wait to see how the market reacts to this, because one of two things is going to happen. We are going to sweep the high and inverse, and we're going to hit the data low and sweep that liquidity, or we're going to rebalance this candle and we are going to proceed higher. It's one of two things, okay? One of them will happen. So let's see. All right, we're immediately dipping into this gap. Okay, it looks like there was zero entry to go short here. So far, I'm not really looking to short. Okay, not really seeing anything yet. Still nothing. Dang. Okay, I will say we did leave behind this pool of liquidity. This is internal range liquidity, which is something we would need. And remember, this is a bullish candle. And it looks like we're reacting pretty bullish right now to the fair value gap. And if this is a bullish fair value gap, price tends to continue going bullish. All right, so let's see. Bang. So right here, we swept out this internal range liquidity. Then, oops, we have the consequent encroachment, the 50% of the fair value gap created by the CPI candle. We dip right below it, and remember what I said. The market likes to dip right below or above equilibrium. So in this case, we dipped right below the equilibrium of the fair value gap. Now what do we see? We see a 1 minute fair value gap right here to the upside, and it got closed above. Or a 1 minute fair value gap to the downside that got closed above. You would then put your stop loss down there and your take profit at the high. So in this case, we're doing the second type of continuation model. We're simply following the trend. If the market's pumping up, we're not going to try to fade this. We're just going to continue with it. Okay? Bang. And that's how simple that is. So like I said earlier in the video, we have two different types of ways you can trade continuations. First is by analyzing the trend. If it's a very bullish day, like in this case, we're going to continue going for longs. But then the second type of continuation is to wait for a level to get edged and then take a trade towards it. It's all the same, just on different time frames. Alrighty, so for our last example here, I'm going to be combining both. So first of all, when we zoom out, we are in a very obvious downtrend. It's going to take a lot of force to fade this and go higher. So what we're going to do is we're going to look to continue going lower. We did just get close to this level. Let's see if we pull back a bit. And as you can see, we have a bit of a pullback. Let's go to the 5 minute, see what we have. All right, right here, we have a 5 minute fair value gap. I'm going to mark this out. And we're going to scale. Let's go to the 15-second because I want to see this move like piece by piece. Okay. Come on. Oops, I did not mean to go that far up. But notice, hold on, let's go back a little bit. Notice how we respected the consequent encroachment, that 50% level, super well on this 5 minute right here. That in itself is a lot of confluence. And what we can do is we can take a CISD. So 1, 2, 3, that's what tapped into it. We're going to do the start of the candle sequence that manipulated into the fair value gap. And since we got a close below right here, we can go ahead and slap a short position on with a stop loss at the high, risking 14 points to make 45. So a 3 risk to reward. Now let's see how this plays out. Bang. Absolutely beautiful. Just trading continuations. As you can see, these are very high probability. These happen multiple times a day. And look how, like, this was like one of the most perfect examples so far. But yeah, so that is exactly how I trade continuations and how they've made me over 70K trading with prop firms this month. If you guys want a guide on how to scale prop firms to over 50K per month, let me know in the comment section. I'd be more than happy to make a video on it. Also, make sure you guys join the free Discord if you have any questions whatsoever. I don't mind helping you guys and responding to DMs and stuff. And real quick, I'm just going to flex on my students. This guy just passed his funded account. We have Drake over here, 10K in payouts already this month. Just got his first payout, and then the same month got 10K in payouts. Omari with 15K payouts. TJ, one-on-one student, first payout. Haesung, one-on-one student, first payout. First funded, payout, 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 funded, 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 payout, payouts from Dre, funded. Keith over here, dude managed to get like 8K in profit and a 4K payout in his first month of trading. Absolutely insane. This obviously works for crypto too. So yeah, people are getting payouts, people are getting paid. Those are all my premium students. So if you'd like to join the premium, it's the link in the bio. I do live trading 3 times a week, Tuesday, Wednesday, Thursday. I do weekly group calls with the team, and there's 40 plus classes already posted. I would show you guys the names of them, but I don't want to leak anything because I'm not going to leak stuff that people have paid for. So yeah, so tons of education. And listen, I want to be very clear. This community isn't something where you can just join and just like take signals and just be lazy. The people who you see are getting 10K, 15K, 20K in payouts. Omari over here literally got moved to a live account by Take Profit Trader because he made over 25K in one trade yesterday. These people aren't doing this by just taking signals and like sitting on their ass. No, they are actively putting in the work each day, staying disciplined, showing up to the group classes each week, watching all the class recordings, joining the backtesting sessions, and joining the live trading and being there to learn. So, if you want results similar to these guys, the link is in the description. But remember, you do have to put in the work or else you will not get results. So, there you guys have it. If you have any questions, once again, join the free Discord in the bio, and I'm happy to answer your questions. Anyways, without further ado, I'll see you guys in the next video. Peace.